Ladies and gentlemen, right now the crypto market is quietly sitting at a crossroads, and the reason this moment matters is because both XRP and Bitcoin are pressing against levels that historically decide whether momentum continues or reverses. These are not abstract chart lines or theoretical discussions. These are areas where real capital has moved before, where sentiment has flipped, and where the next few decisions by traders, institutions, and long-term holders can shape the tone of the entire market for weeks and possibly months ahead. To understand why this update is so important, we need to step back and look at the broader environment Bitcoin and XRP are operating in today. Bitcoin remains the anchor of the crypto market, not just in price, but in psychology. When Bitcoin hesitates, everything else feels it. When Bitcoin shows strength, confidence flows outward into the rest of the ecosystem. At the moment, Bitcoin is trading in a zone where buyers and sellers have repeatedly clashed. Each attempt higher has met resistance, and each pullback has found support sooner than many expect. This tug of war tells us something crucial. Conviction exists on both sides, and that is usually the precondition for a decisive move. What makes this particularly interesting right now is that Bitcoin is no longer moving in a vacuum. Macro conditions, liquidity expectations, and institutional positioning are all feeding into how market participants interpret these levels. We are seeing a market that is no longer purely speculative but increasingly reactive to signals of stability, risk appetite, and long-term adoption. When Bitcoin approaches a critical level in this environment, the response tends to be more deliberate and more telling than in previous cycles. The market is asking a question, and it wants a clear answer. XRP, meanwhile, is in a very different but equally important position. Unlike many altcoins that simply follow Bitcoin's lead, XRP often reacts to its own set of narratives, particularly around usage, regulation, and real-world payment relevance. That said, price still respects technical structure, and right now, XRP is also approaching a zone that has historically acted as a decision point. This is the kind of level where weak hands tend to exit and patient capital starts to pay attention. The result is often compressed price action that feels boring on the surface but is actually building energy underneath. What makes XRP especially compelling at this stage is the contrast between perception and positioning. Public attention may be quieter than during peak hype periods, but market structure suggests accumulation behavior rather than abandonment. Volume patterns, support holds, and reaction to broader market moves all hint that participants who understand XRP's role are not rushing to leave. Instead, they appear to be waiting for confirmation, waiting for the market to show its hand. When you look at Bitcoin and XRP together, a bigger picture starts to form. Bitcoin is testing whether the market is ready to accept higher valuations under current conditions, while XRP is testing whether it can maintain relevance and strength without needing constant speculative excitement. These are different tests, but they are happening at the same time, and that overlap is not a coincidence. Markets often synchronize around moments of decision, and we may be closer to one than most people realize. The key takeaway so far is that critical levels are not just about price targets, they are about behavior. How quickly does the market react to dips? How aggressively does it sell into strength? Do pullbacks feel controlled or emotional? Right now, both Bitcoin and XRP are giving us data through their reactions, not through headlines. If you know how to read that data, you start to see why this moment deserves attention, even if nothing dramatic has happened yet. This brings us to the central question moving forward. Are these levels acting as foundations for continuation or ceilings that will force a reset in expectations? The answer does not come from guessing. It comes from understanding how these assets behave as pressure increases, and that is exactly what we need to break down next. Let me be very clear. Part 2 is where we begin to separate noise from signal, because critical levels only matter if we understand why the market reacts to them the way it does. Starting with Bitcoin, the current range it is trading within represents a balance point between long-term belief and short-term hesitation. On one side, you have investors who view any pullback as an opportunity, convinced that Bitcoin's role as a digital reserve asset is still strengthening. On the other side, you have traders who are cautious, aware that price has rallied enough to justify profit-taking and risk reduction. When these two forces collide at the same price zone repeatedly, the market is effectively compressing energy. This compression is important because it tells us Bitcoin is not being distributed aggressively. Sharp tops usually come with fast upside moves, followed by equally fast breakdowns. That is not what we are seeing here. Instead, pullbacks are relatively shallow, and recoveries are methodical rather than explosive. This kind of structure often reflects a market that is being supported underneath by patient capital that is less sensitive to daily volatility and more focused on broader positioning. It does not guarantee continuation, but it does raise the probability that any breakdown would need a strong external trigger rather than happening organically. Another layer to consider is market participation. During periods of true weakness, volume tends to expand on down moves and contract on bounces. Right now, we are seeing the opposite behavior more often than not. Selling pressure appears controlled, while buying interest quietly re-emerges near familiar support zones. This suggests that fear is not dominating decision-making, which is critical when evaluating whether Bitcoin is preparing for another leg higher or simply stalling before a deeper correction. Turning to XRP, the story becomes more nuanced but no less important. XRP's current price behavior shows signs of stability that are easy to overlook if you are only watching headlines or social media sentiment. The market is no longer reacting impulsively to every piece of news. Instead, price action appears more mature, with defined ranges and repeated defenses of key levels. This tells us that a base is being respected even if momentum has not yet returned in a visible way. What is particularly interesting is how XRP behaves when Bitcoin fluctuates near resistance. In previous cycles, XRP often lagged aggressively during Bitcoin hesitation, only to catch up later in sharp bursts. While that pattern could repeat, the current structure suggests something slightly different. XRP is not bleeding value while waiting, it is holding ground. That subtle difference matters because it changes the risk profile for participants watching these levels closely. We also need to address psychology. Many retail participants are conditioned to expect immediate gratification. When price does not move quickly, attention fades. But markets often do their most important work during these quieter periods. Consolidation is where ownership transfers from impatient hands to more committed ones. For both Bitcoin and XRP, the current environment looks less like abandonment and more like preparation. This does not mean risk is gone. It means risk is becoming more defined. Clear levels create clear invalidation points. If those levels fail decisively, the market will tell us quickly. But as long as they hold, the path of least resistance remains open, even if progress feels slow. That clarity is valuable, especially in a space often dominated by emotion and speculation. So now the focus shifts from what the market has done to what it is likely to do next if pressure increases. How do these assets typically respond when they finally break out of compression? And what signals should viewers be watching before that happens? That is where the real insight begins. Respected viewers, Part 3 is where we translate structure into expectation. Because once a market has spent enough time compressing, the eventual move tends to reveal intent rather than randomness. For Bitcoin, history shows that prolonged consolidation near important levels often resolves in the direction of the prevailing, higher time frame trend unless something materially changes in the environment. That does not mean price will move straight up, but it does mean the market is testing whether demand can absorb supply without needing a dramatic reset. Right now, the evidence suggests that sellers are not in full control, and that alone carries meaningful implications. One of the most overlooked signals during these phases is how Bitcoin reacts to bad news, or even the absence of good news. In weak markets, silence creates fear. In stronger markets, silence creates patience. Bitcoin's current behavior leans toward the latter. Price is not collapsing under uncertainty. Instead, it is hovering, waiting, almost daring the market to decide. That kind of posture is rarely accidental. It often reflects confidence beneath the surface, even if enthusiasm has cooled. For XRP, the expectations must be framed differently, and that distinction is important. XRP does not need Bitcoin to break out aggressively to perform well, but it does need stability. When Bitcoin becomes erratic, XRP tends to suffer from reduced risk appetite across the board. When Bitcoin is stable, even without strong upside, XRP has room to express its own market logic. Right now, that stability is present, and XRP's price behavior reflects it through consistency rather than excitement. This is where many people misread the situation. They look for immediate upside and conclude nothing is happening. In reality, something very specific is happening. The market is defining boundaries. Support is being respected. Resistance is being tested, not rejected violently. That kind of behavior narrows outcomes. It reduces randomness and increases the likelihood that when a move comes, it will be sustained rather than fleeting. Another key factor to consider is timing. Markets often move when participation is low and expectations are muted. The absence of widespread optimism can be a feature, not a flaw. When everyone is already convinced, upside becomes harder. When conviction exists quietly, upside has room to surprise. Bitcoin and XRP are both sitting in zones where surprise becomes possible, not guaranteed, but possible. This is also where discipline matters. Watching these levels does not mean predicting exact price points. It means observing reactions. Does Bitcoin reclaim ground quickly after pullbacks, or does it hesitate longer each time? Does XRP continue to hold its base during broader market pauses, or does it begin to slip? These answers arrive in behavior, not in commentary. As we move closer to resolution, the market will start to give clearer signals. Volatility will expand. Direction will assert itself. And when that happens, those who understood the importance of these critical levels will not be reacting emotionally. They will be responding strategically. That difference often defines outcomes in crypto. Let me be very clear. Part 4 is about perspective, because understanding critical levels is not just about charts. It is about how you think and act when the market is undecided. Bitcoin and XRP right now are not demanding urgency. They are demanding patience and observation. This is often the hardest phase for market participants because it feels unproductive. Yet historically, this is where the highest quality decisions are made, not by chasing movement, but by preparing for it. For Bitcoin, the message is straightforward but not simple. As long as it continues to respect its current support structure, the market is signaling acceptance of value at these levels. That acceptance is the foundation of any sustainable move higher. If Bitcoin were to lose that structure decisively, the signal would be equally clear, telling participants that the market needs more time or a deeper reset before continuation. There is clarity here if one is willing to listen to price instead of prediction. XRP's situation reinforces the same lesson in a different way. XRP is not showing signs of panic or distribution. It is showing signs of compression and balance. That does not promise immediate upside, but it does suggest that downside risk is becoming more defined rather than open-ended. For many viewers, that distinction matters more than short-term price excitement. Defined risk allows for rational planning, while undefined risk invites emotional mistakes. This is also where long-term relevance comes back into focus. Assets that survive multiple cycles tend to do so not because they move the fastest, but because they maintain structure when attention fades. XRP holding key levels while the broader market waits is not something to dismiss. Bitcoin holding its ground while expectations remain divided is not a weakness. These are signs of a market that is thinking, not reacting.